Much as Tesla is already among the most valuable corporations in the country, it now appears that they will become even more well known. The corporation recently stated that it would begin producing its own batteries for use in homes and businesses. After a recent 38.8% decline and a 7-day losing streak that caused a severely oversold state and caused the stock to settle at its lowest possible price since August of 2020, Tesla's stock price suddenly shot off the scale. Tesla's stock nevertheless fell 38.8% in December. Despite that rebound, the automobile manufacturer is expected to experience its largest monthly loss. However, according to Morgan Stanley research, Tesla's stock may not be finished. The firm advised their customers to purchase shares during a substantial drop and indicated that a sell-off had presented an investment opportunity for Tesla stock. Are there chances for Tesla and its stockholders this year? Well, keep on watching. But before that, welcome to Investor Facts, where you may learn about investing and how to make the best financial decisions for your life. Make sure you click the subscription button and enable the notification bell if you haven't already. Share, like, and comment. Lately, Tesla stock surged further, continuing its recovery from a more than 2-year low. This came following Morgan Stanley's most recent remarks on the sell-off within its own business. The shop on it, in the firm's opinion, has produced a compelling prospect for EV makeup investment. According to Adam Jonas of Morgan Stanley, the sell-off was prompted by the EV market's worsening supply versus demand dynamics, which were exacerbated by technical considerations. In a current note, Stanley restated his prior assertion that supply is anticipated to outpace demand and that 2023 is likely to be a restart year for the EV market. We assume 2023 is shaping up to be a reset year for the EV market, they said, where the last 2 years of supply exceeding demand will be dramatically flipped. According to Morgan Stanley's study, Tesla offers a tempting entry opportunity, despite the fact that it maintained an overnight rating for Tesla shares. The stock price is still declining. For the best-case scenario in which Tesla is unable to satisfy the anticipated EV demand in the future, it had previously reduced its price target from its earlier $330 price share to $250. Adam Jonas of Morgan Stanley thinks Tesla can succeed in the cutthroat EV market. Speaking on Tesla's stock sell-off, Jonas mentioned that there are still challenges to be overcome due to rapidly deteriorating macroeconomic backdrop, record high unaffordability, and growing competition. He went on to say that self-funded players with proven scale and relatively low prices all the way through the supply chain, like Tesla, can be relative success in the EV space. In response to these difficulties, he continued, his company remains confident that Tesla will extend its lead in the EV race by taking advantage of its cost and scale advantages. Due to the potential for future development, Morgan Stanley already picked Tesla as one of its top picks for this year. Investment firms still view Tesla shares as having potential for value growth despite the company's recent valuation issues. According to reports, Morgan Stanley's choice of Tesla demonstrated the firm's confidence in Tesla. In contrast to Goldman Sachs' action at the time, Morgan Stanley also kept its price target for Tesla at $330. The company reiterated its position, saying that while 2023 might be viewed as a difficult year for EV market, it firmly believed that a gap will develop between Tesla and its rivals. The majority of Tesla's Model 3 and Model Y vehicles, in particular, recently qualified for tax credits in the US, according to reports. The new $75,000 federal tax credit for electric vehicles in the United States was set to take effect on January 1st of 2023. Even though there were many unanswered questions, the requirements for battery material origin and component production were the largest mysteries. According to a recent announcement from the US Treasury, the rules governing those requirements won't take effect until March. But according to recent sources, Tesla vehicles might be eligible for this incentive. The main issue, though, might be that the eligibility will only last for a short while. The US Treasury Department claims that this is the case because restrictions on new tax credits won't go into effect at all at once because the new regulations will initially be more lenient. for the first few months of the year, allowing bigger tax credit on more electric vehicles. Although Morgan Stanley may appear to be quite bullish on Tesla, it is important to note that the company decreased its target price on the stock from $250 to $330, even in the best case scenario. The current bull case for the company has been raised from a $500 price target to $440 per share. Tesla is anticipated to sell at 18x 2030 EBITDA and 3.7x 2030 sales under Morgan Stanley's bull case. For the worst case scenario, when the automaker is trading at a multiple of 2030 sales and an EBITDA of 0.6, the cost per share has decreased from $150 at target to $80. Despite this, many analysts believe Tesla stocks will make a significant comeback this year. This transition may be hampered by a variety of variables, one of which is the perception of problems with Chinese production and demand. However, Tesla halted production in China due to an increase in COVID-19 cases. According to rumors, Tesla was already preparing to halt the majority of production at the Gigafactory in Shanghai during the final week of December. Therefore, the action is taken earlier than originally anticipated. The Gigafactory in Shanghai, where Tesla makes the Model 3 and Model Y, is the company's most significant manufacturing facility. Therefore, for a while, this could have a big impact on demand, leaving Tesla to deal with high inventory levels and its second largest market, which were prepared for a slump. Given that fewer cars are likely to be acquired in the upcoming months, it may have particularly negative impact on local demand in its market. Perhaps Tesla could get around the problem if its Shanghai Gigafactory prioritized producing vehicles for Xbox rather than the needs of the local market. The car firm frequently called off the early shift at the production facility and informed the employees they may begin their break, despite the fact that it provided no specific justification for the suspension. According to early reports, Tesla intended to temporarily halt production of the Model Y electric crossover at the Shanghai Gigafactory. Therefore, the manufacturing halt may have been a component of the automaker's intention to reduce production by about 30% in December of 2022. Overall, there are still a lot of Tesla-related developments to look forward to in the coming year, most of which are likely to be promising. That doesn't mean that Tesla stock performance is assured, since it is. The world economy is now in a highly hazardous condition, particularly in the United States, as the Fed continues to move interest rates higher to combat rising inflation, according to various Tesla bullish market analysis and even Elon Musk himself. As the pressure between the US and China continues to rise, supply shortages may also get worse. As a result, many tech suppliers, including Tesla, face difficulties providing necessary parts while keeping an eye on the company's finance and future. Tesla already has a strong fundamentals, including high earnings and profitability, as well as low levels of debt in comparison to competitors. So investors can obtain a better understanding of the circumstances and opportunities of the stock. Additional good news may be in store for Tesla shareholders in addition to continued development and demand for all of its goods, as well as taking into account Tesla's upcoming production capabilities. The semi-truck that Tesla has already begun to produce presents another chance for it to challenge the auto sector. Similarly, the long-awaited Cybertron is now a reality and may be available for purchase at any moment. These products have the ability to raise Tesla stock and are anticipated to considerably increase sales over the coming years. Thanks for watching. If you like this video, please subscribe to our channel. We're always posting new videos about finance, investing, and business tips that can help you grow your wealth.